Hey everybody, what's up? Nice to see y'all. Yesterday I could not do a video because I was working on finishing up MMT Trader, which took me the whole entire day. And I sent it out late last night, so if you are on the email list, you should have received it. If you didn't get it, and if you are a subscriber or on a 30-day trial, just go to the website pitbulleconomics.com and click on the tab that says products, and you will see a link there that says current and back issues. Just click on that and make sure you are logged in with your username and password. The main thing, there were a number of things that I spoke about in the report as usual, but I think the main point, or one of the main points, was we have seen since mid-May, I'm saying, a slowdown in the rate of growth of federal tax deposits. Now, one might look at tax deposits as sort of a barometer of economic activity. When the economy is growing rapidly, it throws off more taxes to the federal government. And when the economy slows down, then the federal government collects less taxes. So we have seen since mid-May a not a sharp, but definitely you can see, and I put a chart in there of a slowdown in the growth in federal tax receipts. All right. Now we may then say perhaps that second quarter growth peaked around that time. Remember, it came in at 2.6%, so it may have peaked in the mid or latter part of May. We got some numbers in June. Like, for example, inflation was, I think CPI was negative in June. It was only up 0.1 in July. So, we saw some, at least from a pricing point of view, some indication that I guess would corroborate the slowdown in federal tax deposits. But anyway, read it for yourself if you want to read it. If you don't have a subscription, you can get a 30-day free trial. Just go to my website, pitbulleconomics.com, and sign up for a 30-day free trial, and I will send it to you. Now, let me talk about something. We never presume to know the future absolutely. We just do not know it. We make educated guesses. This is a probabilistic endeavor. Before I get into that, let me just make an announcement. I have another student or follower, subscriber, who emailed me today, who using my techniques, we had a position on in dollar Canada, long dollar Canada. First we shorted that thing, and then it came all the way down from 136 down to 124 or something like that. But we got long a little bit early. But using my techniques, this student has just informed me this morning that he traded out of that with a profit. And once again, another student with zero losses. So there's a whole bunch of them out there who, since they have been using my techniques, zero losses. So I just wanted to throw that out there. Congratulations to that student. You know who you are. We never presume to know the future. This is a probabilistic endeavor. We try to put the probabilities on our side using very cogent analysis and a proper understanding of the monetary system. That's what we do. We use MMT. And we use trading tactics and strategies which, like this student, allow us to trade out of situations that maybe did not work out. Okay, it still worked out for him. He ended up with a profit, not a big one, but a profit. One thing I do know, all right, is that we as human beings, we live in societies, and all societies have governments or authorities which create laws and rules and regulations and tariffs, and most likely there's some kind of financial structure, there's a central bank, all of these things. And these things control the economy. These things by decree, by diktat, control the economy, all right? There's no such thing as the free market. I'm sorry to bust your bubble on that, all you libertarian thinkers. There's no such thing as the free market. We live in a world where there's countries and there's rules and there's regulations and there's tariffs and there's trade agreements and there's central bankers and there's all these things that have an effect on the market. And in most cases, these policymakers, whether from the president on down to the central bank to the Congress or the assemblies in various nations, they tell you what they're going to do to us. Now, sometimes they do that kind of like just to be transparent, but a lot of times it's from the standpoint of control. They say, we're going to do this to you, or we're going to do that to you. And when they tell you that, I know what to do. All right. So the thing is, and I've said this before, basically as investors, what we have to do is to sit around and wait for them to tell us what they are going to do. And when they tell us what they're going to do, because, a lot of this is done with the input of many, many different people. If you look at Congress, if you look at a National Assembly where you can have hundreds of deciders, right? It doesn't flip back and forth day to day. They make up their mind to do something good or bad. They usually don't know, and it's usually bad, or it usually benefits one small group. And then that's it. They basically leave it until they decide to change it in a different direction. So that's why, trends tend to endure. They're really based on political cycles. And I would say the shortest political cycle is for the United States, it would be every 2 years when we have a congressional election. And then more importantly, it's every 4 years, all right, when we have the presidential elections and another congressional election. Fed terms are 4 years. Janet Yellen, right? The Fed, back in December 2015, we're going on almost 2 years now. Pretty soon it'll be 2 years. They decided to raise rates. That was the first time in 9 years they decided to raise rates. They did that, 4 times, or is it 5? I don't remember. And last month, or June, one of those months, Yellen said that they were almost done with their rate hike. And that kind of threw a monkey wrench in the works, because everything started to go a little flat on that pronouncement. Now, I don't think they are done, okay? I just think they are done. And as a consequence of that statement, I think you saw things go flat and markets start to discount the end of Fed rate hikes, or possibly. And as I've explained to you so many times in the past, rate hikes are inflationary because they raise general prices without necessarily raising output at the same time. So that explains this kind of malaise that we're in, at least in terms of seeing a sell-off in commodities right now, a little weakness here. The Fed's on hold. But I do not think, and I'm going to make this prediction, and I don't know for sure, but I do not think that that's going to be forever. All right, next month they're going to start unwinding their balance sheet, although that's going to be a very small amount to begin with. But that is not deflationary. That is mildly, you're seeing a 10 billion per month increase in net financial assets to the economy. The income off of that is small, I agree. But it's a net addition of financial assets to the economy, which would not have been there had the Fed continued buying those assets. So you have all that stuff going on. So what do? We got to sit and wait. The trends are still the same, those which I have spoken about in the past many times here. I will let you know, or at least I will let MMT Trader subscribers know when things change. And they could change. We got Congress has to come up with a budget next month. They got to do the debt ceiling, all that stuff. So I will keep you informed. For now, I'm going to let you go. I'll see you later. Bye-bye.